All right, good day. Hope that you're doing well. Welcome to the Bright Mind Academy YouTube channel. Now, this is officially our first video for 2025. I know I haven't been posting this year. It's just that I've been busy with some other commitments, but now moving forward, I promise to be consistent. And now the first video for us that we're posting, it is all about statement of cash flow. Now in this video, I'm going to be looking into an exam question that has to do with your statement of cash flow. Now this is from your 2021 IEB November question paper, but also if you're doing NSC, I suggest that you should also watch this, because the principles that I'm about to discuss here, not only do they relate to your IEB, but then they relate to accounting as a whole, right? Now with that being said, let us look into these questions that we have here. Now 3.1, we need to complete this section of your cash flow statement, and to be specific, the cash flow from financing activities. The first line item that we should calculate is proceeds from shares issued. Now remember, these are shares which were issued during the year. Right? So these are shares that are issued during the year. Now let me look at the information that I'm given, and let me see how can I go about calculating this amount for my proceeds. So I'm going to go to this information that has to do with shares, right? So now to prepare this, most of the time, right, you would need to prepare your ordinary share capital note, right? So I'm going to try and draw this here on the side, my ordinary share capital note. Now remember, here it's your number of shares, and here's the value of those shares. And we would always have our ordinary shares at the beginning, and as well as our ordinary shares issued at the end. Now, in accordance to this information here, let me go and look into my ordinary shares capital balances. So my balance from last year, it's 2,920,000, right? 2,920,000. And how many ordinary shares did I have at the beginning of the year? 3,600,000 shares. Now, this is how they integrate your balance sheet with your cash flow statements, right? So most of the time when you're preparing the cash flow, you would need to prepare your ordinary share capital in order to answer certain questions. And sometimes it may be necessary for you to also prepare your retained income note. Now, not only do they integrate your statement of cash flow with your balance sheet, but also with your ratios, right? There are certain values whereby in order for you to get them, you would need to make use of your ratios, but then we're going to get to that, right? Now, let me look into my ordinary shares information that has to do with the end of the year. Now, at the end, my ordinary share capital balance was 4,554,000. It's 4,554. Let me confirm. Yes. And how many shares did I have at the end of the year? I had 4,950,000 shares at the end. Okay, now let me go to this information that has to do with shares. Remember, I'm interested in shares that were issued during the year, because this is the line item I'm looking for on my cash flow statement from financing activities, right? So now let me quickly change the color of my marker, all right? Now, in accordance to this information here, it says at the end of the year, this is at the end, right? The company bought back 50,000 shares, right, for 70,000. During the year, new shares were issued at 120 cents each. So these were issued during the year, meaning that they first issued these, and then at the end, they repurchased shares, right? So here, I'm going to say, okay, ordinary shares which were issued during the year. So these are additional shares which were issued during the year, right? And at how much? These were issued at 120 cents. And these are the shares that I'm looking for. The amount that I'm looking for is for these shares which were issued during the year, right, at 120 cents. Now, they didn't give us the number of those shares, as you can see, meaning that we would need to make use of this ordinary share capital to determine the number of shares that we issued during the year, because we already have the price, okay? Now, also, this information says at the end of the year, the company bought back 50,000 shares. This is at the end. So they repurchased 50,000 shares. I'm going to put them in brackets. 50,000 shares were repurchased. Right, remember here we repurchase at an average price, right? But we're not interested in that. Here we're looking for these additional shares which were issued during the year. So I have then value. I know that each share was 120. Now, how can I find the numbers, right? So this is X. It's my only unknown, right? So I can just punch this into my calculator, 4,950,000. And if I go backwards, I'm going to do the opposite. I'm going to add 50,000, and I'm going to minus 3,600,000. Or you could just simply solve for X, right? And now if I punch that into my calculator, let me go about doing that. Plus 50,000 minus 3,600,000. And this is equals to 1,400,000. Right? These are the number of shares which were issued during the year, right? And now to find the value of those shares, I'm simply going to multiply that by 1,2, and this is 1,680,000. Right? And this is what we were looking for, additional shares which were issued during the year. Now, going back to this, remember, it would be a cash inflow, right? So I'm going to say an inflow of 1,680,000. These were shares issued during the year. Now, in a nutshell, here, as you can see, they gave us the price for each share with regards to these shares which were issued during the year. And if that's the case, always, you would need to prepare your ordinary share capital account in order to determine the number, right? Because here, the only thing that we didn't have is the number of those shares which were issued during the year. And how would you be able to do that or to determine those shares? Always, you would need to prepare your ordinary share capital account, just like we did here, right? Making use of the information you're given. Now, the second line item, shares repurchased. So here we want the total repurchase price, right? So remember, this is an outflow because we are buying or money is going out. Now, let me look at the information relating to shares repurchase. Here, as you can see, at the end of the year, the company bought back 50,000 shares for 70,000. Now, this is the total repurchase price. And this is what we're looking for. Now, what if they didn't give us this total repurchase price? Most of the time, they can give you the average price, right? Or the amount above the average. So if that's the case, if they didn't give us the total repurchase price, just like in this instance, you would have taken your average price, right? Plus your amount above average, which would be from your retained income. So it's your average price plus the amount above average. This would make your total repurchase price. And after you get your total repurchase price, you just multiply it by the number of shares which were repurchased, right? So for instance, if they said the average price was, or the amount above the average was 1,5, making use of your ordinary share capital, right, you would have calculated your average price. Now, remember, here there are two ways you can calculate your average price. So let me just quickly change the color of my marker. So you can take the value of your shares, divide them by the number of your shares. You're going to get your average price. Or you can take this, still the same thing, the value of your shares divided by the number of your shares here. You would still get the same average price, right? And after you determine that average price, let's say that average price is, or let's try and calculate it in this instance, right? So it's, let me just take 4,554,000 divided by 4,950,000, 0.92, right? Let's say 0.92. This is just an example. So you would have taken this average price plus this amount above average, right, to get your total repurchase price, which would be 2.42. And this 2.42, you would have multiplied it with these number of shares which were repurchased, which are 50,000, right? And you would have gotten your total repurchase value. Okay, but in this scenario, they already gave us the total repurchase value because they said these 50,000 shares were repurchased for 70,000, right? So there's no need for us to go about doing that. So here, I'm going to say 70,000, which is a cash outflow. All right, now the last two line items, they relate to your loan. Proceeds from new loan. This is the additional loan that we took, as well as repayment of loan. So let us see the information relating to loans, and let's see how can we calculate these two amounts, right? And most importantly, right, it's important for me to mention that when it comes to your repayment of loan, you are interested in that amount that excludes interest. For example, if they say your annual installments, or rather your monthly installments, are 20,000, and on top of that 20,000 that you are paying, it includes your interest, right? Make sure that you exclude interest from those installments, because here, with regards to repayment of loan, we're only interested in the capital portion, meaning that always from your repayments or your installments, make sure that they exclude interest before you can take them into this account, or rather into this statement, right, as your repayment of loan. But let us go about seeing the information that we're given. So now, okay, additional loan, we need to calculate it. We are given loan repayments, and these loan repayments, they include interest. And remember, I said you must make sure that before you put them in your statement of cash flow, they exclude interest, right? Now, So I have my repayments, which are 271,500. They include interest. Now, luckily here, they gave me information whereby I could use it. They say repayments of the capital portion of the loan amount to 15,000 per month, right? So here, 15,000. Now, this is the amount or our installments, which excludes interest, right? Our monthly installments, which excludes interest. I'm going to multiply them by 12. And doing so, this is going to be 180,000. So these basically are our monthly repayments in total, which excludes interest. And this is what we are looking for on our statement of cash flow, right? Remember, when we are repaying the loan, it will be a cash outflow. So I'm going to put this in brackets as, okay. Now proceeds from new loan. Now there are many ways you can go about calculating this amount. Others use a ledger, but I use this formula whereby I'm going to say, okay, I have my balance at the beginning with regards to my loan plus interest plus any additional loan minus my installments. These are my total installments, by the way, right? They include interest minus my installments. This would be equals to my balance at the end, right? This is the same format with your ledger, right? Ledger account, but I don't like using ledger accounts, right? Here, what is it that I need to calculate? I need to calculate this amount, additional loan, right? So let me go about taking these line items that I'm given. Your balance at the beginning with regards to loan, it's 930,000. And the interest, remember, these are my installments including interest. These are my installment excluding interest. So the difference between these two amounts, 271,500 minus 180, I'm going to get my interest, which is 91,500. And additional loan, this is what I'm looking for. I'm going to put X minus these are my total installments, right? My total installments here, there are 271,500. But remember, the installments that you're going to put on your cash flow, you always need to make sure that they exclude interest, right? And this would be equals to my balance at the end, which is 1,100,000. Now you can solve for X, right? So 1 million. So I'm going to take 1,100,000 and I'm going to go backwards. And if I go backwards, I'm going to do the opposite, meaning that I'm going to add, I'm going to say 1,100,000 plus 271,500 minus 91,500 minus 930,000. And this would be equals to 350,000. So this is the additional loan that I took. And remember, if I take a loan, money would be coming in to the business. As a result, it would be a cash inflow, right? So let me quickly change the color of my marker. So proceeds, these are from the additional loans and inflow, 350,000, right? And now lastly, to find my cash flow from financing activities total, so it's 1,680,000 minus 70,000 plus 350,000 minus 180,000. And this would be an inflow of 1,780,000. Okay, so let me quickly write that down. Now, the second question, they want us to calculate the total dividends expense, the interim as well as final dividends for the year. Now, let me see information relating to dividends. Right, 3.3. Both interim and final dividends were declared during the year. The dividends paid as per cash flow statement, right? Remember your cash flow from operating activities under dividends paid. This is the amount that they got, 436,900. And remember, this is always an outflow, right? Because we're paying cash. Now, how do we calculate that dividends paid, which is in your cash flow statement? We're going to need to make use of that in order to calculate our total dividends, which are our interim added to our final dividends. Now, I use a table, right? And on this table here, it's going to be my total dividends, which is my interim, as well as my final. Basically, this is what I'm looking for. And always this amount is an outflow, right? And I have my shareholders for dividends balances. So it's my shareholders for dividends. This is balance at the beginning. And this is also in brackets. And lastly, shareholders for dividends balance at the end. And this one is not an outflow. And lastly, the final answer that I'm going to get would always be an outflow, which is my dividends paid. And this is the amount that goes into my cash flow statement. Now here they're telling me that that amount is 436,900. Remember, this is what I'm looking for. Now let me see if I have my shareholders for dividends balances. So here's my shareholders for dividends balance. So these kind of questions, if you know your format, it will be easier for you to answer them, right? Now I have my balance at the beginning, which is 252,000. And I'm also given my balance at the end, which is 660,500. And when it comes to calculating dividends paid as well as taxation paid, 99% of the time, those two questions are always going to be there whenever they ask you or whenever your cash flow statement is examined, right? So make sure that you're comfortable with regards to calculating those two amounts. Okay. Now, I have my dividends paid, I have my shareholders for dividends balances. Now I need to calculate this, which is X, right? So you can just solve for X, but I'm just simply going to punch this into my calculator. So I'm going to say negative 436,900. When I go backwards, I'm going to do the opposite. I'm going to minus 660,500. I'm going to add 252,000. And my answer, it will be negative 845,400, right? And this is an outflow because it's a negative, which is what we were looking for. So my total dividends paid, they amount to 845,400. And you can simply do these on your answer sheet, anywhere in your answer sheet, or on this little box that you're given here, right? As long as the marker would be able to see your workings, right? So here I've calculated my total dividends expense as 845,400. All right. Now moving on to the next question. Here we are reconciling our profit before tax and cash generated from operations. So basically, this is the only note that you need to go about knowing how to prepare, which is your cash generated from operations note, right? So here we need to complete this note and we need to find each of these line items. So the first line item being your net profit before tax. Now let me see if I'm given my net profit before tax. Okay, luckily I'm given my net profit before tax as 1,586,000. All right, so I'm going to write it here. Adjustment in respect for depreciation as well as interest expense. Now, am I given my depreciation amount? Yes, I'm given my depreciation as 214,000. So these I'm going to make sure that they are not in brackets. Your depreciation and interest expense, you need to make sure that you add them. So it's 214. Now my interest, remember the interest on loan that I calculated, right? This is the interest on loan, right? So remember it was my installments which excludes interest. And remember these amounted to 180,000, right? And I took these installments which included interest. And when I subtracted these two, my interest, remember it was 91,500, right? 91,500. And now when I add these two amounts, right, punching them into my calculator, they're going to give me 305,500. This is the total for the two. Okay. Now, my operating profit before changes in working capital, I'm going to take my net profit before tax. I'm going to add it to this adjustments. So 1,586,000 plus 305,500. This is going to be equals to 1,891,500. Okay, now changes in working capital. So first, inventory. Now let me see my inventory balance, right? Trading stock. I am given balance at the beginning. I am not given my balance at the end, right? And moving forward, when you're given or when you're not given one of these two balances, as I've mentioned at the beginning of the video, you're most probably going to make use of ratios to determine either your balance at the beginning or balance at the end. In this instance, our trading stock balance at the end, we need to make use of ratios to calculate it, right? And the ratio that you're going to use, it must have trading stock inside its formula, okay? So now let me see. So here they already gave me the movement in terms of trade and other receivables, but then I'm not interested in that. I'm interested in trading stock. Now, these are the three ratios that I'm given. Which ratio has trading stock in it? Your acid test, right? So this is important for you to know your formulas. But then most of the time, these three formulas, or rather these three ratios, are the ones that you're going to make use of most of the time in your cash flow statement. But remember, you need to be comfortable with all of your ratios, right? Now, my acid test, I know it has inventory in it. So let me quickly erase here on the side. So now remember, what is the formula for my acid test, right? So it's current assets minus your inventory or trading stock divided by current liabilities. This would be equals to my acid test. In this instance, my acid test is 1,5. This is what I'm looking for. And most probably, this you can see, this is the acid test at the end of the year, right? Hence, it makes sense we're going to find the inventory balance at the end of the year, because all of these balances that they used to calculate this acid test were from the end of the year. So let me see if I have my current assets balances or my current liabilities. Going back to this table, let me go and see. So, okay, I would need to remember your current assets consist of your trading stock, your trade and other receivables, which consist of your debtors control. And in this instance, right on this table, let me identify my current assets. Trading stock, debtors control. Let me see the other one. SARS income tax, which is a debit balance. Remember, if it's a debit balance, SARS owes us money. So this is a current asset. But the only problem is that I can't calculate my total current assets because I don't have this trading stock balance, right? So my total current assets, I can calculate them, meaning that how would I do that? If I can't calculate them manually, I would use ratios to calculate them. And now, which ratio am I going to use? It would depend on what I have. So I don't have current assets. Now, let me see my current liabilities, right? So I have to first identify them on the table, my current liabilities. So it will be my creditors control, accrued expenses. Remember, these are expenses which are not paid in full. SARS, if it's a credit balance, you owing SARS money. So this is a current liability. So in this instance, my current liabilities are 3, as well as my shareholders for dividends. Remember, shareholders for dividends is a current liability. Okay, there are 4, and I have all of those 4 balances, right? So I can just simply add them. Now, let me add all my current liabilities. So my creditors control is 696,000. My accrued expenses, they amount to 13,000. My SARS, which is a credit for VAT, credit balance is 6.5. And then my shareholders for dividends, 660,500. And I add all these, my total current liabilities would amount to, now remember to show these workings on your answer sheet, right? 1,376,000. So these are my total current liabilities, right? So let me write them here. So I have my current liabilities, and I've calculated them by just adding all of them, 1,376,000. So I have my current liabilities. Remember, I'm looking for this. I have my current liabilities. Can I find my current assets? Remember, I couldn't add all my current assets because I don't have my trading stock balance. I'm going to make use of which ratio here, which have your current assets. So this would be your current ratio. So remember, with your current ratio, it's your current assets divided by your current liabilities. And in this instance, our current ratio was equals to 2,2. Right? So our current asset X, which is what we are looking for, our current liabilities amounted to 1,376,000. This is equals to 2,2. So multiplying both sides by, or rather, 1,376,000. So my X is going to be equals to 376,000 multiplied by 2,2. My current assets would amount to 3,027,200. These are my current assets. Okay, so you now have your current assets, you now have your current liabilities. Your inventory is the only thing that is unknown here. So we can calculate our inventory balance now. So our current assets is 3,027,200 minus X, which is inventory, divided by current liabilities, 1,376,000. This is equals to 1,5. Now, to get rid of this denominator, I'm going to multiply it on both sides. So It's going to be 3,027,200 minus x is equals to, so 1,5, let me just punch this in my calculator, multiplied by 1,376,000. This is 2,064,000. And now to get my x, I'm going to take it to the other side, so that could be a positive, and I'm going to put this here. So basically x, which is my trading stock or my inventory balance in this instance, it's going to be equals to 3,027,200 minus 2,064,000. And punching this into my calculator, this would be 963,200. Right. Now, can you see how they're integrating ratios with your cash flow? So our trading stock balance at the end. So let me just quickly draw this here. And remember, this is trading stock. Balance at the beginning. We have balance at the end. We have just calculated our balance at the end as, let me just go see, 963,200. And our balance at the beginning for trading stock, it was given as how much? 838,700. 838,700. Remember, we're looking at the movement. We're interested in only whether did it increase or decrease, right? So here, as you can see, our trading stock increased. Last year, it was 838,700. Now it's 963,200. And if it has increased, that does represent an inflow of cash on outflow. This is an outflow, because when your trading stock balance increases, it simply represents that you have bought more stock, right? Hence, an increase in trading stock would represent an outflow. And when your trading stock balance decreases, simply means that you sold more trading stock. Hence, a decrease in trading stock would be an inflow. So here, it's an increase. Let me go and see my answer sheet. So it's an increase in inventory, right? And as I've mentioned, increase in inventory to be outflow. So now let me get the difference between the two balances, balance at the beginning as well as my balance at the end for inventory. So punching this into my calculator, this would be 124,500. All right. Now, receivables. Now, receivables, we only have debtors control. We're not given the balance at the beginning. Let us see from the additional information. And also remember 3.4, it says the movement of trade and other receivables resulted in an outflow of cash of 152,000. Okay, so they already give us the movement. So outflow 152,000. So I'm going to put brackets. So now you need to indicate whether did they increase or decrease. Now remember, when your receivables, let me start with increase. When your receivables increase, it simply means that you have borrowed more people money. As a result, it will be a cash outflow, right? So in this instance, it's going to be increased, because why? We borrowed more people money, and when we borrow them money, we are taking out money, so it's an outflow. And when your receivables decrease, it simply means that some of your debtors have paid you back, and as a result, that's an inflow, right? Because you're receiving money. All right. Now, payables, lastly. Now, when it comes to our payables, let us look into our trade payables here, right? So firstly, let me just go about doing this. Now, our payables, so let's start. Let me look at these years. So last year, it will be our creditors control, right? Accrued expenses, okay? SARS for VAT, and now income tax is a credit balance, meaning that it's also a payable. Now, why don't we include it under payables here, right? As to be precise, when we are preparing this cash generated from operations note. The reason being is that, remember, on your cash generated from operations or your cash flow statement, when you're calculating taxation paid, right, you're going to be making use of these balances for your SARS income tax, right? So when they ask you to calculate the taxation paid, these are the balances that you're going to use, right? So these balances, you're only going to use them whenever you're calculating taxation paid. So now when we're calculating our payables, right, even though SARS income tax is a payable, but then we would need to exclude them here, right? Because why? These two balances, we're going to calculate, or we're going to make use of them when we're calculating taxation paid. So here, our payables would only be these three, right? So I'm going to say 624,000 plus 17,000 plus 4,000. So this is for 2020. My payables amounted to 645,000. Now, doing the same for this year, it's my creditors control, 696,000 accrued expenses. Now, because this is a credit balance for VAT, I'm gonna choose that, right? And here SARS owes us money, so okay, we're not interested in that. Now, these are our three payables, right? And now adding them or punching them into my calculator, these are gonna amount to, so let me just quickly do that, 696,000 plus 13,000 plus 6.5. So 715,500. So this is for 2021. Now, as you can see, my payables have increased, right? So this is the first thing first that I'm going to show on my note. My payables have increased. So these have increased. Now, what's the increase, or rather, when my payables increase, it simply means that I borrowed more money. Hence, now I'm owing more people, right? My payables have increased. Now, when I'm borrowing more money, I'm receiving money. So this would be an inflow. So the difference between the two amounts would be an inflow. And when I subtract the two, 70,500 is my cash inflow. Okay. Now, what's left? Changes in working capital, negative 124,500 minus 152,000 plus 70,500. So this is going to be negative 206,000. Right. And this would be our complete cash generated from operations note. If they wanted us to calculate this balance whereby they mentioned do not calculate, we would have took this amount, operating profit before changes in working capital, subtract by changes in working capital, and then we would have gotten this final balance, right? Now, let us move on to the next questions. Now, determine the purchase price of one of the new delivery trucks. Now, I like these type of questions. These kind of questions whereby they say, for example, calculate your proceeds from disposals, calculate the purchase price of your new delivery trucks or your fixed asset, right? And most probably they're not going to give you those prices. You need to go about calculating them. Now, this is the formula you need to use, right? So whether it's calculating additional fixed asset which was bought or any fixed asset which was sold. So it's going to be balance, or the carrying value rather, of my fixed asset at the beginning So it's the carrying value of my fixed asset at the beginning plus my additions at cost minus my disposals at carrying value. Now remember, on cash flow, right, especially there is a certain line item which says proceeds from disposal. So now this is from your cash flow from, let me just think, investing activities, if I'm not wrong, right? So your cash flow from investing activities, they're gonna say there is a certain line item which says proceeds from disposal of fixed asset. They want your disposal at carrying value, right? Not the amount that you received. Okay. But then in this instance, what is it that we're trying to calculate? We're trying to calculate the purchase price of one of the delivery trucks, our additions at cost, right? Now here's my carrying value of my fixed asset, all of them at the beginning, plus any additions at cost of any of my fixed asset, minus any disposals I've made during the year. And now this added to depreciation. This is similar to the format of your fixed asset note. And lastly, this is going to be equals to my carrying value of my fixed asset at the end. As I've mentioned, you're always going to make use of this formula whenever you're trying to calculate, just like in this instance, the purchase price of your new fixed asset or your proceeds from disposals. And sometimes maybe if they want you to calculate depreciation. Okay. Now, let us make use of this formula to answer this question. So let me look at my carrying value of all my fixed asset at the beginning of the year. So my fixed asset here is at the beginning, it's 2,780,000. Now, additions at cost, this is what I'm looking for, X minus my disposals at carrying value. Now, I'm going to go to my additional information. During the year, right, okay, we purchased 3 new identical delivery trucks at the same price. Okay, now let me see what the information want. Determine the purchase price of one of the, so here they want the purchase price of one truck. Okay, it's fine. We're gonna do that. Now they sold old equipment at the book value, which is the same as carrying value of 860,000. So this is what I need here, minus my disposal at carrying value, book value, 860,000. Right? And my depreciation, sorry about that, I need to subtract it, not add it, right? So here it's minus depreciation. Now let me look. I think I was given depreciation, I remember. My depreciation here is it 240,000. So minus 214,000. And this would be equals to my carrying value of my fixed asset at the end of the year. So my fixed asset carrying value at the end of the year, 2,981,000. Now, when you're familiar or with these formulas, right, or when you've mastered these formulas, any type of questions relating to them, whether it's calculating your proceeds from disposals or your additions at cost, it will be easy for you, right, as long as you know the formula. So now you can solve for X, right, and I'm going to do that by saying 2,981,000. I'm going to go backwards and I'm going to do the opposite. I'm going to add 214,000 and I'm going to add 860,000. I'm going to minus 2,780,000. And if I do so, my additions at cost, they would amount to 1,275,000. Now, this is the total cost price of those three vehicles that are identical, which they said we bought, and we want the price of one of them. I'm going to divide this by 3, right? And if I do so, the price of one of those trucks, it's 425,000. This would be my final answer. Remember to show these workings on your answer sheet, right? If you don't have space, you can just write them at the side of your paper or at the back of your answer sheet. As long as you would mention that the info, maybe you can write something like a clue to give the market clue. Info or calculations are at the back, as long as you're gonna inform them. Okay. Now, 3.5. Calculate taxation paid as it would appear on the cash flow statement. Now, as I've mentioned, when it comes to dividends paid, taxation paid, these two calculations, you should be very comfortable with them, because most of the time when you're preparing the cash flow statement, they're going to ask you to calculate those two, right? Now, taxation paid, how do I go about calculating it? For me, it's easier if I use a SARS account. So let me quickly raise here on the side. So for me, it's easy if I do this making use of my SARS account. Now, let me just quickly draw my SARS account here. Now, remember, this decreases on the debit side and increases on the credit side. So this is my SARS income tax account, to be precise, right? This is my SARS for my income tax. And this account increases on the credit side, right? So now, only 4 things that I need would go to this account. I need my 2 balances. So my balance at the beginning, as well as my balance at the end. And I also need my income tax expense for the year. How much is my tax expense for the year? And lastly, this is what I'm trying to calculate, bank, the amount that I've paid to SARS. How much did I pay to SARS? Now, with regards to your balance at the beginning and balance at the end, whether would they go on the debit side or credit side, this would be dependent on if are you owing SARS money or is SARS owing you money, right? Now, for both your balance at the beginning and balance at the end, if you owe SARS money, your balance would be on the credit side, right? Whether it's at the beginning or at the end. And if SARS owes you money, your balance would be on the debit side. Okay. Now, with regards to your income tax expense, this increases the amount you owe to SARS. So hence, it would always be on the credit side. And your bank, the amount that you paid over to SARS, it reduces the amount, right? Or it reduces your payable. So as a result, this would always be on the debit side. So let me write these two, which are always. So your income tax expense, as I've mentioned, it's always on the credit side. And the amount that I paid to SARS as well. Right. Let me put this a little bit down. Now, let me start with my 2 balances, right, for income tax. So this is what I'm interested in, SARS income tax. And my balance at the beginning of the year, it's 34,000, which is a credit balance, meaning that at the beginning of the year, I was owing SARS money. credit balance of 34,000. So I'm going to say, okay. So this is balance brought down at the beginning, or my balance at the beginning, which is 34,000. Now let me go and have a look at my balance at the end. My balance at the end is a debit balance of 9,000. At the end, SARS was owing me money. So here, balance brought down of 9,000. Right, and remember, before this was brought down, it first had to be carried down here. All right, now my income tax expense, or my tax expense for this year, which is what I'm looking for, right? Because remember, I said I need my two balances and I have them here. And after I've gotten my two balances, what is it that I'm now looking for? My income tax expense. And always this would be a balancing figure. So let me see if I'm not given my income tax for the year. Okay, I've given my net profit before tax, and I'm told that taxation is 30% of the profit. So I'm just simply going to take 1,586,000, right? Multiply it by 30%, right? Because my taxation is 30% on this net profit before tax. And let me punch this and see how much this would give me. 1,586,000 multiplied by 80%. And this is 475,800. Right. Now, as I've mentioned, your bank would always be a balancing figure. Okay. So now, if my balance carried down is on the credit side, it simply means that my debit side was the side which was the greatest, right? So now I have all my line items in my credit side. I'm going to add them. So taking 34,000 plus 475,800 plus 9,000. This would give me 518,800. And remember, your credit side would be equals to your debit side. And here on my debit side, I only have one line item, which is my bank. So as a result, this would be the balancing figure for bank 589. And this is how much we paid to SARS. And this would be the amount that you're going to recognize in your cash flow as taxation paid, right? And remember, this would always be an outflow, okay? Now, moving on to the next question. The last question wants us to determine the cash movement for the year end. Now, remember, there are two ways of calculating your cash movement. So this is the last part, basically, of your cash flow statement. Remember, the last part has to do with your cash and cash equivalents, right? So you take cash and cash equivalents at the beginning minus your cash and cash equivalents balance at the end. Now, if you're not given, let's see if you're given the information relating to cash and cash equivalents here. So on this table, I don't see any information relating to cash and cash. Now let me go and see on my additional information. 3.7, the remaining completed sections of the cash flow statement of the year. So we have cash generated from operating activities, right? Or cash generated from operating activities. So this is the first part of your cash flow from operating activities. This is the balance that they got. Cash utilized from investing. And remember, the last one is cash flow from financing activities. There are three sections: operating activities, investing activities, as well as financing activities. Now, that's the only balance we need. And remember, these balances combined, they're also going to give us the cash movement for the year, right? Which would be the same balance that you would get if you were using your cash and cash equivalence balances. But in this instance, we are not given them, meaning that we need to make use of these three totals. Now, cash flow from financing activities, this was the first question that they asked us to calculate. Remember, 3.1. Our cash flow from financing activities was an inflow of 1,780,000. So 1,780,000. Now, cash generated from operating activities. Now, the way generated gives you a clue that this is a cash inflow. They generated money. So the second one, cash utilized. Utilized, we used money. So as a result, this would be an outflow. And our cash flow from financing activities was an inflow. So basically here, to get my cash movements, so this is the last question, I'm going to take 638,300 minus 415,000 plus 1,780,000. And this would be 2,030,300, right? So to be 2, this would be your final answer. All right, and that'll be all for this video. Remember, if ever you have any questions, always feel free to reach out. Thanks.